this transition or evolution of Bitcoin from its commodity valuation cycle to its money valuation cycle, right? Where it right now it's the valuation, the market price is tracking the production cost as we've described, but there's going to come a point where it starts just being an accretive monetary premium, right? That the market price way outpaces production cost, and it just keeps doing that forever, basically. My thinking, I don't know, maybe this is not the same thing, but just tell me what you think. I always thought that because Bitcoin has basically perfect information, right? In terms of its issuance schedule, we know what its supply is and will be between now and forever, basically. And I don't think we can say that about any other asset at all, right? Gold would be the closest proxy for this because it historically has the most slow growing and predictable supply. It's not an issuance schedule, it's a discovery schedule, but kind of similar for Bitcoin. Bitcoin's is basically perfect, right? You know, with, I don't know, a very high degree of certainty what it will be, and you know it will never be more than 21 million, right? And so you know that in more or less 2-week increments, right? As the difficulty adjustment changes. So my thinking was that if price continued to move subsequent to halvings, right? Because historically it's like you get a new all-time high Bitcoin price roughly 18 months after halvings, and then you get a drawdown, trade sideways for a year, and the cycle repeats. If that pattern played out enough times, that eventually people are just going to start front running that thing.
Yeah.
Or I think like, why am I going to wait for this thing to run up and chase it and buy it and, you know, get hit with a drawdown when I can just assume, well, it's happened 7 times. It's probably going to happen the 8th time. Or it's happened 10 times. It's probably going to happen the 11th time. And when it's a psychological change. And this is what's so tricky about money. Once that psychological inflection point is hit, then it does become a self-fulfilling prophecy because people start buying it in anticipation of it doing the thing again. And in buying it, they're increasing reservation demand for the asset and causing it to do the thing again, right? In the same way, contrarily, inflation, right? If you expect the value of the dollar to go down, then you're going to sell the dollar to buy anything else, thereby contributing to the decline in purchasing power of the dollar, right? So inflation and valuation, these are psychological phenomenon. And so I don't know, what does that land, and does that map onto what you're saying is that there is going to be this psychological tipping point that's just going to drive Bitcoin from commodity into its money phase?
That is such a great point that you just made, because there's two realities here, and people have a hard time stepping out of the fish tank and kind of looking at the bigger picture. And I like to say it like this: there's the producer and the consumer. There's the lender and there's the borrower.
Right.
Typically, people look at it through one angle, and it's the angle that they're coming from. So Bitcoin mining gave me a big advantage, and I recommend to those people out there, get a hobby miner. You're not going to make money, but you'll learn a lot about the network. And what happens is the halving, people psychologically front run the halving, anticipating a higher price because the cut in supply to the block reward. But they stop there. And they just think, well, it's a pattern. I've discovered a pattern. Yeah, but what are the underlying fundamental economics of that? The halving immediately doubles cost of production.
Right.
So for a miner, the cost to produce the Bitcoin on the halving without mercy doubles overnight. And then every 2016 blocks, you're getting hit with a difficulty adjustment. So it's a very tough business, but it's those economics that drive value into the price discovery process. And people psychologically see the price action, but I don't think they put 2 to 2 together to describe the price action. They rely more on this type of pattern thing. And it's the same thing with what's going on with the dollar. We see it right now. The psychological portion of dollars inflating has actually come down a little bit, especially with Elon Musk and Doge, because people look at that and they say, oh, I think we got a solution to this. But Doge has cut, I mean, even if Doge successfully completes its goal and cuts a full $1 trillion off the budget, we have a budget deficit of $2 trillion. And after you look, the deficit is a projection. Okay, like I project, like if you work on commissions, I project I'm going to make this much. The reality changes from what you project at the beginning of the year. So a lot of times our deficit is a lot larger. It's significantly larger than the projected deficit. Realistically, we're like at $2.5 to even $3 trillion of deficit, not the budgeted barely $2 trillion of deficit. So if you cut one, we're still at a $2 trillion deficit, which means we have to
annual
print.
loss every year.
Annual.
Yes. Yeah.
And you know, actually Max Kaiser quote tweeted me like 2 years ago. We got put in Forbes for this. We called it the death spiral. And we said, look, if you raise interest rates, you think you're going to slow down the economy. And you will slow down the economy. But the economy is not the source of inflation. You look at Venezuela, they did a very strong demand destruction campaign in Venezuela. It doesn't matter. The economy only wanted water and food. All prices still went up because the source of the price increase was the abuse of the currency, not the economy.
Right.
I believe the Fed made the same mistake. They are punishing the economy for the sins of deficit spending.
Right, for their own sins.
Yeah, exactly. So if we can kind of, but that's the psychological twist. People say, if we can fix this, then I feel comfortable holding these bills, notes, or bonds at 3 or 4%. Because in the long run, I might gain purchasing power. And then the other thing that ties into this psychological warfare is the lack of accuracy within the consumer price index. The incentives behind CPI are so corrupt that it makes it what Elon's finding now with Doge look like fairy tales and fairy dust and everything's okay. I mean, that's how corrupt it is. And there's clear economic incentive to understate CPI. It goes into Social Security. If you use the 1980s CPI, which I believe is the most accurate CPI, we use that on govflation.com, it's over 10%. So if you look at 10% inflation and then subtract the 4.5% that you're getting in a U.S. Treasury bill, that's negative. 10% minus 4.5 is negative real interest rates. Well, the natural incentives created by negative real interest rates are exactly what you stated earlier psychologically. Wait a second, why am I going to save? I'm going to get less goods and services if I save. I need to spend now because I'm going to get more goods and services for my purchasing power now. So when the official numbers are telling you you should save, but then the reality is telling you spend because you're going to lose, we end up where we are right now, where half the world thinks we're going into a recession, depression. The other half thinks that the economy is strong, and everybody's honestly confused. Some of the best asset managers in the world are confused right now. My position is we are in the middle of the recession right now. And here's the difference. The textbooks will define a recession and everybody automatically, psychologically just thinks negative. Negative, negative, negative. Prices have to come down. That means recession. No. A recession is when your quality of life and your standard of living go down. That's what you need to be focused on. And we are in an inflationary recession. And if we don't make the proper changes, we will move into a hyperinflationary depression. Because our net worths are going up.
Nominally.
Prices are going up, but in real terms, right? Nominal terms, if you don't know what's going on, you might feel a little bit richer. But in real terms, you're getting poorer and your quality of life and your standard of living are going down. So we are in the middle of the recession right now. And this all goes back to your first question, the money versus the currency. If you integrate Bitcoin, you eliminate the ability to trick people. Because Bitcoin then becomes that direct barometer, and it almost already has become that. We see a lot of charts shared out there by economists, especially Lynn. Alden does a great job of showing money supply, global liquidity, relative to Bitcoin price. So it's kind of already doing that. But when you make it official and you get a strategic Bitcoin reserve or you tie Bitcoin bonds, which I know we'll dive into, now you have a direct barometer on that. And I think that dampens the psychological warfare we see on the populace to control that understanding of what's really happening.
It's so. This is I think the most important aspect of this whole analyzing what money is thing is like you have to realize that it is an instrument of perception, right? Like you're looking through the money to perform economic calculation, and if that lens is dirty, then the image, the truth that you're seeing is going to be distorted, right? As we're talking about the difference between nominal and real, right? Oh, nominally, the dollar, my net worth is going up in dollar terms, but in purchasing power terms, you're actually getting poorer, right? That, I call it a cognitive optical illusion. It's like it's people are deceived into believing that everything is good. It's like that little meme with the dog and everything's burning down. And you say, this is fine, like people just think it's fine. but they're not seeing. I mean, I think people feel it definitely, and the further down the economic hierarchy you are, the more you feel it. So maybe this is more so like people that are wealthy, that are experiencing this shadow confiscation, right? While they think everything is fine, but they're actually being robbed blind in broad daylight over time. And I don't know, there's not an easy way to get people to get that. Like I've seen, for instance, like Thomas Massey, I've seen him be like, look, here's beer and here's water, pour water in the beer and you have diluted beer. That's inflation, right? Like I feel like that's about as easy as you can get with it. But it's something about the transparency of money and the fact that it is this perceptual apparatus. I often compare it to something like language. Like it's difficult to think about language because we think in language, right? It's difficult to think about money because we're thinking in money oftentimes. And so many people just default to thinking in terms of dollars that it's hard to take those glasses off and see the truth of what's going on, that you have distorted vision when you're looking at the world in terms of dollars. And so, that's like something I want to try to get across on this show, but obviously it's a mouthful to say it all. Yeah. Even though the principle is not that complicated, right? You're just watering down the beer, basically. Yeah. And calling it the same thing, right? You're calling it a beer when it's half water, half beer. Yeah. And clearly that's not true. So,
and the wealthiest people, they know this. This is why they do what Michael said. They're land banking.
Yeah. Right.
Why do the wealthiest people hold assets instead of bonds?
Yes.
Like you would figure that they would keep everything in bonds and just have immense amount of cash flow. But instead they get the cash flow they need from their businesses or a specific cash flow portion of their portfolio. And everything else is pretty much land banking or finance banking or equity banking because they know they cannot keep it in the dollar.
Right.
But like you said, as you go lower down the totem pole,
people depend on dollars more.
They're paycheck to paycheck.
Yeah.
Most people don't have savings.
Yeah.
I think that I read a statistic the other day. Most Americans, now we're supposed to be the richest country in the world. Most Americans don't have $600 in a savings account.
Yeah.
That's unbelievable. $600?
Yeah.
And what was the other statistic I saw? Most American families don't have more than $1,000 for medical emergencies. So when you're living paycheck to paycheck like that, and inflation is something that you see more powerfully over an annualized basis when you have assets, this is why I think there's a disconnect. Because we've built this economy into a consumer economy, and helicopter money has already been sent out. So if people are wondering how far along we are in this process, the helicopter money phase is typically like when you get to that phase, the warning bells are going off. We're approaching the end of the currency's life cycle.
Yeah.
And if there aren't dramatic changes in fiscal and monetary policies after you pass that point, you get to the death spiral.
Yeah.
They're going to try to raise interest rates, but when they raise interest rates, the interest cost goes up. So that's blatantly obvious now. But back in 2021, end of 2020, it was not obvious. And that's why Max got us into Forbes saying, look, you think raising interest rates is a solution. What you're going to find is when you raise interest rates, the next problem you're going to create is your interest cost. And now we're paying more on interest than we are for our freaking military. And we spend more on military than I think the rest of the world combined. To give you, it's over $1 trillion in interest payments. So now what are you going to do? You're going to lower those interest rates. But when you raise the interest rates, people sold off assets, got into the cash equivalent products to get the cash flow. And now when you lower those rates, where are they going to stay? In those instruments? No. They're going to flow right back into hard assets. And now you're going to get prices going up, not from inflation, because inflation is the expansion of the currency supply. Now you're going to get prices going up because of the increase in demand. Now we're just going back to basic supply-demand economics. There's trillions of dollars that have been creating cash flow on the sidelines. I think it's upwards of $4 trillion. When interest rates go back down, where's that $4 trillion going to go? Stay in instruments that create a nominal negative rate of return? Hell no. They're going to go right back into those assets, and that demand is going to push up those prices. And when you have an affordability crisis, what is the government? What's their only option? Print money and send it out. And I love Trump. I voted for him 3 times. So I wanted him in there, and I think that America has a chance with him in there. But he's the one who sent the helicopter money.
Yeah.
He's the one that shut down the economy.
Yeah. And there's still, I mean,
there's precedent for him to send out more helicopter money.
And Doge and all these things, like, it's less bad than what would have been perhaps, but they're still sending money to Israel. Like, they're still waging, like, the money printer is not going to stop. Doesn't matter who you put in office. Thanks for watching. If you enjoyed this episode, click here to find more just like it, and here to find our most recent episode. Also, make sure to like this video to help shine light on the corruption of money, and be sure to subscribe to this channel to stay connected.